Hey everyone, welcome back to FinTech. Now if you watched one of my previous videos where I showed you my stock portfolio, I was up almost 62% in just over 6 months. That video was for the end of June 2020, and then during the month of July 2020, my portfolio went up an additional 13%, which I'll probably make a later video covering. However, in just the few days since the end of July, my stock portfolio has been hit hard by several earnings reports by my companies. None of these has hit me harder than Alteryx. Alteryx was 6.5% of my portfolio at the end of July, and it's down almost 30% since then. Stocks don't just drop like that with no reason, so I tried to look into why this might be. And it all stems from their latest earnings report. So I decided to look into it to try to decide, is Alteryx fundamentally flawed as a company from this point going forward, or does the drop in the stock price represent a discount which I can get in on? In their latest earnings report, Alteryx reported that they had grown revenue 17% year over year. Now, for a normal company, that might be really impressive. But for Alteryx, that just wasn't good enough. You see, Alteryx's valuation was based largely on how fast it's been growing the last couple years, around 60% in terms of revenue year over year. Now, that's a really high revenue growth rate to sustain, but Alteryx has somehow managed to do it consistently up until now. So why is the company suddenly growing so much more slowly? Well, Alteryx sells tools to basically help companies analyze their data. They make it so that non-data analysts can produce reports that look like they were produced by a data analyst. This function that they provide is super valuable to companies, but the fact is most companies have been hit really hard in recent times. Because of that, it's really hard for Alteryx to go out and grow even larger than it already is, because that means they have to convince companies that are already struggling to put out even more money on a new tool which they don't necessarily know if it's going to help them or not. Interestingly enough, Alteryx has actually not seen many of its existing companies dropping its product. And that's because the tool and service that Alteryx provides actually generates more revenue for those companies than it costs them. So even in lean times, it doesn't make sense to cut it out. The only area where Alteryx is really facing headwinds is going out and finding new companies to sell to. This alone leads me to believe that this is a temporary slowdown for Alteryx and not a permanent issue with the company itself. I think a big part of the issue with Alteryx is the actual metric that it's reporting. You see, Alteryx is reporting that its rate of revenue growth has dropped from 60% to 17% year over year, which really does not look good. The problem is, Alteryx does its accounting a little bit differently than most other software as a service companies, which are basically companies that sell software subscriptions to other companies. Rather than recognizing revenue as it comes in, as in when the companies actually pay it to them, Alteryx recognizes around 35 to 40% of the value of a subscription contract in the first quarter that it actually signs up that customer. And then the rest of the amount is spread out over the length of the contract. For example, if Alteryx signed a $10,000 contract with a customer, they would recognize between $3,500 and $4,000 of that in the first quarter, and then the remaining $6,500 to $6,000 would be recognized over the rest of the length of the contract. So if we think about what was happening a year ago, this makes sense. A year ago, companies were flush with cash, and it was really easy for Alteryx to go out and sign up new customers, meaning that they saw a huge bump in their revenue for those particular quarters because they were recognizing all that revenue up front. Now during 2020, it's become a lot harder for Alteryx to find new customers. So even though those old customers are still paying them, they're not getting that big 35 to 40% bump from signing up those new customers. Basically, because of the way that Alteryx does its accounting, if they suddenly start signing up new customers, their rate of revenue growth jumps artificially higher than it really should. And at the same time, if they start signing up fewer customers like they are right now, the rate of revenue growth drops really substantially also. So as investors, our goal is to determine what the actual truth is and how much this company is actually worth. Well, clearly just looking at rate of revenue growth is a little bit misleading. So the question is there a better metric that we can use? Luckily there is. The average recurring revenue. Now, average recurring revenue is probably a little bit more intuitive to us. Basically, Alteryx is recognizing the revenue that it's paid as it's paid that over the life of the contract. Now, it's a little more complicated than that, but that's basically the general idea. Now, if we look at the average recurring revenue for Alteryx, it's actually up 40% year over year. meaning that the amount of money that Alteryx was bringing in last year is 40% less than what they're bringing in this year. Now, if we go back to looking at growth rates, this means that Alteryx dropped from around a 55% ARR to a 40% ARR year over year. Now, while this is still a substantial drop, it's nowhere near as substantial as dropping from 60% revenue growth to 17%. I would honestly expect that next year, once Alteryx is able to start selling to new companies again, we're going to see a big swing in the other direction. Because in 2020, they're selling so few new customers, their revenue is going to be artificially low because of their accounting practices. And then next year, once they start selling to new customers, all that revenue is going to be recognized up front, and it's going to look like they had a huge boost in revenue all of a sudden. So yes, Alteryx will probably continue to flounder as long as its customers are facing headwinds. But it's important to note it's not losing customers. It's just struggling to sign up new ones. For them, it's just a waiting game until they can start selling in earnest once again. And at that point, it's off to the races. I hope you enjoyed this quick video. I just wanted to give a quick update on my thoughts on Alteryx while it was still fresh. If you like this video, make sure to leave a like, and if you want to see content like this in the future, make sure to subscribe. I'll see you next time.